Welcome to Kansas City Real Talk, brought to you by KCRR. I'm Alex Gehring, and I'm here with special guest host John Ketchum.
Bobby Howe.
Bobby Howe is
with
gone
a lower voice
today, and so Bobby is replaced by past guest.
A couple times. Yeah.
Friend of the pod, I guess, is a thing that you say.
Is it a thing that you say?
I think it's a thing that people say on
We're gonna say
podcasts. I'm looking at Amber. I mean, I hear that
Friend of the pod.
sometimes. Yeah. So, John, how are you today?
I am wonderful. I'm heavily caffeinated, as we were talking about. I've recently converted to straight espresso. Had a few of those, but I'm not.
A few of them?
My hand is calm.
Well, we were talking about this, and if you've listened to the podcast for like the last 7 years or however long we've been doing it, you've probably heard something about how I kind of dialed back my caffeine and switched coffee out for espresso because there is less caffeine in a latte than there is in just like a cup of black coffee. But I'm curious about three of them. So and you were telling me that you're drinking like straight espresso, just like
right in Italy, sitting there with give me a little tiny cup, with straight espresso, and I don't know about brands. I won't pimp out a brand here, but I buy a box of 80 of these little pods, and you've got the actual machine. I've got like a $50 put in the pod and clamp it down, but I even have like a flavor palette and from a bitterness or a strength of 6 to 12.
Yeah.
This one goes to 12. This one goes to 11. You know what I'm talking? You get
I
that
do.
reference?
Yeah, I get you.
Okay.
I'm with you.
A little Spinal Tap.
Yep.
So 3 of those and a coffee plus a shot here. So.
God,
but
man, that's a lot.
Yeah, but now I feel awake.
You feel awake? Yeah. That's good.
I'm just now awake. A couple more of those and I might be at overdose. I do have if you want a quick side note of my experience, kind of like yours about coffee.
Yeah.
I was a bank manager. That's kind of how I got into real estate. I was a banker first, and I was working for Bank of America, and they had moved me from one store, if you will, to another one that needed a little bit of extra oomph. It was off Holmes and 85th here. And there was one other associate that drank coffee. I know that. And we had to go through a key code door to fill up the coffee pot. So doing some really poor math, I found out how much coffee I was making and then consuming in a day. And it was around, so if you say a pot of coffee is 12 cups.
Yeah.
I was drinking right around 22 cups a day.
Oh, that's insane.
Yeah. And when the wild thing is that was regular for me, but when I did the math and then recognized and acknowledged it, then there was a time I was getting in the car, because I drink it all day long, getting in the car around 5:30 p.m., and I was jittery at the wheel, and I had like an episode of like blacking out a little bit.
Yeah.
And I thought, I bet that's related to the coffee that I'm drinking.
So one of the things I do, after this jolt, I'll probably switch to it, but and my agents know this, is the weirdest thing, but I just drink hot water by itself. And so
it's that warmth.
It is. That's really
ritual.
what I need. I like the way that it feels in my hand. It's also, if you're a singer, it's actually better for you to drink either room temperature or slightly warmer water. And so I've never been like big on ice water, but once I came off of as much coffee as I was drinking, the hot water was kind of the ticket, and that kind of helped me reduce my my caffeination.
I will keep that in mind, because I often say that a big part of the coffee experience for me, of course, is the caffeine, but then why do you keep going if you're jittery? And I think it's the ritual. I think that warmth, that, especially if you're in a cold room, or, they like to keep rooms cold in these conferences to keep you awake.
Absolutely, yeah.
So maybe I'll try that.
Yeah, and we're not going to get into regularity benefits. That's a weird thing to talk about on a real estate podcast. But warm water also assists you with that. It's all about wellness, right? We don't talk about that enough. Everybody's afraid to talk about that. John,
Speaking
are we?
of wellness, that's a great segue.
It is,
because I saw that Bobby usually talks about a book that she's read recently.
Yeah,
avid reader. I was in college, and therefore it corrupted me. I would read these translated like Immanuel Kant translated from German to English and just poorly translated. And the quickest way to get me to fall asleep is give me a dense description and I am out. Like start reading through and it is the best sleeping pill.
Yeah.
Even if I've had a bunch of coffee.
Yeah.
So I don't read much, but I will listen to podcasts. I listen to I consume a lot of Reddit articles. But I'm stealing this from David Nichols. I'm going to give you guys the because one of my favorite podcasters is Jay Shetty, and I think a lot of his concepts on life coaching resonate with me. But this is a podcast with Simon Sinek and Jay Shetty, and it is called, the podcast is called A Bit of Optimism, and the episode is The Myth of the Perfect Meditator with podcaster Jay Shetty.
Oh, interesting.
So I have not, now, this is completely based on the fact that I really enjoy Simon Sinek and I really enjoy Jay Shetty. I have not yet listened to this podcast.
Okay.
But it'll be the first thing I do when I get in my car.
Nice.
Due to David Nichols telling me
I'm
about
actually
it.
not familiar with Jay Shetty.
Jay, there's a lot of relationship stuff in it, but of course that's business too, right?
Yeah.
You know, we talk about, one of my favorite quotes is conflict arises when expectations are different. And that works through all aspects of life, right? If we didn't have the right expectations, you have every right to be mad or be upset or be hurt by what I said. Well, once those are cleared, then usually less conflict unless I'm just trying to, bombard
Antagonize.
you. Yeah, antagonize you.
Yeah.
But there's a lot of that kind of philosophical stuff. Jay Shetty was like a monk for quite some time.
Okay.
And now he's a social media influencer. But
that's interesting how that goes.
Yeah, but yeah, exactly. He's running an MLM, company. I actually, this is all
That's
just,
a
I like to
different
tell
form
him
of
myself.
enlightenment. you go from monk to Robert Kiyosaki.
He decided
hawk.
he did have some needs of material
my
world to carry.
gosh.
But if you're selling a product that
You're
resonates,
not selling this guy to be very well right now, John. But I'll check him out.
I'll send you a different podcast, and we won't talk about the subject nature, but it's good. And that's an offline conversation that we can have.
Oh, okay.
Yep.
Where are we? I
Where
think
are
that's
we?
important.
We are at Recharge.
We are at Recharge. We haven't mentioned that yet.
Yeah, we should have.
Yeah.
That's your fault.
It is. I'll take that.
Aren't you the regular here?
I'm the regular. I should have started it out saying that we are at Recharge. Every year when we do Recharge, it seems that either Bobby or I am not able to be here. And it's something we've been doing now for a good long time. And today, you and I get to interview James Dwiggins right when he gets off of the stage.
And I've heard a lot more about James than I've heard from him, so I'm really excited about that. But I'll say this: in the post-settlement era that we're in, and we're gonna leverage that question to him. What is the value of a buyer's agent? And we, as realtors and real estate agents, we do think we know, but how does the public really feel that information? And are we perpetuating it the way that, in ways that I think are clear, consistent messaging? And that is a big part of what Raise seems to be about. So, listing agents usually control the market, as we know. And so buyers agents, if they still want to get compensated, they've got to show their value. And I think that that's fair, right? We need to be able, you wouldn't buy something that costs a lot of money just because everybody else does it. You would need to understand what's the value. Why do I need that, right? And that seems to be what Raise is all about. So I want to let James fill in more of those gaps.
Awesome. Well, I'm looking forward to it. Let's see. Should we go get James?
Let's get him.
Looking for more options to rock your home? Voted best in KC, Rock Tops now has 2 locations to better serve you. Come visit their award-winning showroom in Olathe or the new location in Lee's Summit. Making homes look incredible is kind of their thing. Rock Tops designs, fabricates, and installs stone countertops in the Kansas City metro area. Visit either location and mention Real KC Rocks to get 10% off your countertops. Details and restrictions apply. Visit rocktopskc.com to rock your home with rock tops. Welcome back to Kansas City Real Talk, brought to you by KCRAR. John and I are here with James Dwiggins, one of our Recharge speakers. James, how are you today?
I'm doing well. Thank you. I'm excited to be here.
I talked you up big time, James, so don't fail me now.
Oh, God. Yeah, put the pressure on.
He asked me about Raise, and I'm going to be introducing you on stage in a few moments. And I knew the general concept of it, but I didn't want to steal any thunder. I had talked about how, buyer's agents have it kind of rough these days, but I've always needed to show our value. And I think that we could go down that rabbit hole and talk a little bit about, but you're going to be doing some of that on stage a little bit.
Yeah.
Are you going to be talking about that today?
I am, yeah. So during my keynote, I'll do probably the last 15 minutes talking about Raise and sort of where it is and what it's been able to do for agents, and which has been really exciting. And the first part of my keynote, I'll talk a little about the industry, sort of where we are, the landscape of what's been happening. There's no shortage of headlines in residential real estate. And then I'm going to do a lot of focus on how agents can curate their own buyer and seller experience that needs to be different than what it is today. So it's a presentation I've been taking around the U.S. Everybody really excited about it. So that'll be a lot of fun, and I'll finish on Raise and go in great detail on that. So,
awesome.
Yeah.
Well, James, before we get into all that, tell us a little bit about you. Where'd you start? How'd you get into the industry? What makes you tick about real estate?
Yeah, so I'm third generation. My grandfather started his company in 1967, and on the Central Coast of California. He grew it to be a really large organization before he sold it in the late 80s. Both my parents were real estate brokers. My dad's passed away now. My mom is retired, but they were both real estate brokers and agents. I worked for their company early on in my career. And then I got involved in prop tech, started and sold 2 software companies in the late 90s and 2000s. After that, I was a little bit lazy and decided I didn't want to work for a bit after doing it. As I got tired, I was like, oh man, this is a lot of work. But I had a client of mine who was a company called Realty World. It was a regional franchise in Northern California. They were a client of one of the companies I sold, and he was like, "You're being lazy. You need to go do something." And I'm like, "I know, but I'm enjoying my time off." So I went to work for them in 2006, which was a regional franchise, about 400 offices across Northern California. It's a big company. And then, I got involved in the franchising side of the business, which was fun. And then worked my way up.
Sorry to interrupt. Were your parents franchise owners, or did they have their own?
They own their own small independent.
Cool.
Yeah. So they worked for my grandfather, and then they opened up their own small independent shop, which was fun. My mom worked for a lot of different franchises too over the years, but Dwiggins Realty and Financial Services was the name of it.
Dwiggins Realty Financial Services. Yeah. Okay. Yeah. Financial side, did you do did they
My father did a lot of hard money lending as well with my grandfather. So my grandfather sold his company. He became a hard money lender and did a lot of trustees and things. So
I interrupted because Alex and I both worked on that broker side. I was a franchise owner for Remax, and he's got a big office as within a franchise. So that was interesting to me. So please continue.
No, it's fine. Yeah. So I went to work in the franchising side and got involved in that. Ended up working my way up the ranks with my current business partner, and we ended up buying that company in 2014. And then we started Next Home, which is the current franchise that we run now. So we ran 2 different companies for a long period of time. We sold that other franchise called Realty World in 2020, right before COVID, which sounded like a really smart. But actually, if I waited longer, it would have made more money.
A couple of years.
But Next Home has been our focus since 2014 when we started it. We ran that other company, and then that's been our sole focus since. We're about 630 offices now across the U.S. So it's a big company. It does about $12 billion in volume. So it's been a fun ride. And then more recently, I've been involved in a lot more of the industry side of it. We have a national podcast we do called Real Estate Insiders Unfiltered, which has been a lot of fun. And then, I have not been shy of opinions about our industry and where we should be going.
Which is why you're here, man.
Yes.
That's the real deal.
Yeah.
I'm most interested, and this is obviously going to be so off topic, but I'm most interested in your lazy period. I want to know
what does one do?
Yeah. What were you spending your time doing? I have a hard time believing, just in like a short interaction with you, that you weren't doing anything. What were you doing?
Well, so that's a boring story, but I'll give you the short version of it. I had met my now ex-wife, but we're very close friends. But I moved from San Luis Obispo, California, my hometown, after I sold my company to San Francisco. And so just adjusting to a new lifestyle. So went from a town of 40,000 people to a town of almost 1 million. Was a big adjustment.
Were there wineries in San Luis at the time?
There are. It's actually a huge wine region.
Well, were there then?
Yeah.
Okay.
Well, ironically, it wasn't as big a wine region. Now it's a massive wine
Exactly,
region.
yeah.
And the wineries that were crap are actually quite good these days.
So getting drunk on wine, but
yeah,
then
basically,
you
I was trying to avoid that. So thank you.
I
was drinking a lot, sitting on the couch. It lasted for
pulls you to
about
San
90
Francisco.
days. I mean, I'm kind of a serial entrepreneur, but I think everybody can relate to this. Being a business owner is hard.
Yeah.
When you're at the top, everyone's like, oh, it must be nice. You get to do all these things. And I'm like, no, that's not actually how it works. Being at the top means you deal with nonstop problems, all the stuff that other people can't handle come up to you. You've got the stress of payroll, all of those things. So for me, taking a break was good. And since then, I haven't taken one. So, it's been just a constant journey. I have a 4-year-old terrorist now who I love dearly.
Oh, awesome. So fun.
So yeah, she's awesome. But it's, look, it's been, I think the industry can relate to this. It's been a hard few years. We went from COVID where we didn't know what we were going to do and leading the industry through that. And then coming out the other side, we obviously had, massive inflation that came from that. And we've been dealing with a market that took a downturn in 2022. We've been in a recession in real estate for 3 years, and we're going to come out hopefully the other side. Real estate typically leads us in. Real estate typically leads out. We're seeing some of these changes, but for agents, it's been hard. We do an average of about 5.3 million units across the U.S. on, resale, and we've been averaging just over 4. And I'll give you this perspective. So we did in 2008. In that era, we were doing about 4.6 million. So when you think about the Great Recession, which we went through, it sucked. Like, it was hard. This is in one way harder. It was different, but the amount of residential sales that we're doing today is significantly less than even the Great Recession. A lot of agents weren't even here during that time frame, but I've been through many of these in my life, and this has definitely felt harder. It's affected everybody the same, and so we're hopeful that things are going to get a little bit better. We obviously, I'll talk about it today just for a few minutes. We don't know what this trade war is going to do. We certainly are concerned. Certainly interest rates have come down, but there's a lot of questions on how this all ends up and whether we go into a large recession or a small recession. Small recession could be actually good for us, kind of brings rates down, get buyers off the fence.
Right.
If we go too far into a recession, it could be actually even worse. So lots of stuff happening as usual.
So on that note, I think there's going to be. Well, I got into banking in California after my stint as a rock star wannabe, and I just needed a job that was in the Midwest. So joined a bank here, and there's banks in the Midwest, and that's what I did. But I was just on the leading edge of that recession as a banker. But here in the Midwest, these ripples tend to happen on the coast, and then they're a lot less significant in the Midwest. They were significant, but in comparison to what I saw happen out in Southern California with real estate prices, it was not nearly as devastating around here. I would say, and I think Alex probably is somewhere on the same page with me on what's happened post-settlement since last August. Here hasn't. I don't think. I mean, it's been tough for a buyer's agent for a while now for different reasons. But tell us about that specifically in your market. Like, I think that's you can segue to Raise if you want, but what has that environment been like post-settlement for the agents that you work with?
Well, look, I'm in all 50 states, so I see this from a perspective that most don't. The reality is it depends upon how the industry has moved. So if you look at California, they made a preemptive move. They were actually smart in doing so. I think they did the right thing where I think a lot of associations have not made the right decisions. They removed cooperative compensation from their forms, period. So I think what makes this conversation unique, and I think your listeners will appreciate this, is I am a named defendant. So I got sued by the lawyers. I've been through 3 of these. I've gone through all of this process with the plaintiffs and have settled these cases. I have a unique perspective that 99% of the industry does not. in that I've negotiated with the plaintiffs. I've met with them. I understand how they think. We are not done. There is no scenario where this litigation is over. And so unfortunately, I think a lot of the industry has their head in the sand on this, in that thinking if you remove cooperative compensation from the MLS and then add it to forms where you have horizontal competitors creating forms that are sharing compensation is not going to end up in litigation is completely insane to me. And so, California made a big move. It's my home state. They said, we're not doing that anymore. We're going to get out of this further litigation. We don't want to even put our members in any spot where there could even potentially be litigation. And so where you see cooperative compensation removed, you'll see differences. What that means is good agents candidly charge more because they're able to articulate their value. Agents that are not as good, they meet with the buyer, they charge what they're worth as they do through the agreement and the settlement. And so rates have come down. Where you see areas where cooperative compensation is still occurring, it's a lot more status quo. And I've said this everywhere publicly. Again, this is my opinion, and just from an educated perspective, I think the industry has not paid attention to what these lawyers will do. And the part that people need to understand, having gone through this, I was spending $100,000 a month in legal fees in defense. The United States legal system is one of the most corrupt in the world. I know this is a harsh statement, but let me explain. We follow the American rule of law here versus the English rule of law. English rule of law specifically means that loser pays. In the United States, we don't follow that. So lawyers can file suits for anything, and then you are burdened with the cost of defense, and it is almost always cheaper to settle than go to trial. So the problem I have is we're not thinking 5 to 10 moves down the line. We're looking at it going, well, let's just do this, and we followed this as close as possible, and we'll take the risk. When in reality, I think that we're setting ourselves up for a lot of future problems. So my comment and my answer to this is you are seeing change depending upon how the industry moved. A lot of companies don't do cooperative compensation anymore. EXP, me, Real, Baird & Warner, the list goes on. We don't touch it. Our agents are not allowed to share commissions, period. We say if the seller wants to offer compensation, it's a seller direct payment to the buyer brokerage. We are not collecting and remitting.
Can I ask, so not even in a purchase contract?
That's fine, but we're not. So what I'm not doing is my listing agents are not collecting money and sharing with the
and
competitor.
It's still seller direct. Yeah.
Okay, I just want to be clear on that.
It removes all liability because
Correct.
you can do the same thing. You're just not doing any sharing.
Just so you know, we have our association forms are right on par with that.
That's perfect.
Yep.
I don't. There's so many
I was just
associations. I don't know each one specifically, but to answer your question,
for the listeners is what I'm saying. Our
and you guys
KCRAR
were
forms
smart
have
in
removed
doing
it,
that.
yeah.
That is the smartest move possible.
Arguably, we did it before California.
Great, good, and that's a great thing to say because
Jessica Thomas would want me to make
that's
sure
right.
that I threw that.
And
in.
I'm glad you did because it's a smart move, and your listeners should be appreciative of the decisions that the association has made because they are limiting your risk by doing that.
So James, on that point, because that's exactly where I thank you for that perspective. That is that you made my day, quite frankly, of hearing that insider info.
Sure.
So on that note, have you seen, would you say, much of a change in what buyers agents are being compensated, whether that's through their representative, their client, or through a seller?
When there is no cooperative compensation, you are seeing more of a change. Yes, you are seeing some of the rates come down because it's no longer some sort of guaranteed number that the listing agent's offering. So it is making a shift. I think the hardest, and I'm going to piggyback this a couple ways. As an industry, we have got to be looking at all the chess pieces on the board, and we are horrible at that. So I'll talk about this today during my keynote. This thing with Rocket, everyone's like, Redfin was like not a big deal, and it's a brokerage, and it's a website, whoop-de-doo, they had no market share. And I'm like, that is not what you should be paying attention to. That has nothing to do with the acquisition of it. This is mortgage moving up funnel, trying to get up funnel in the process. And the biggest thing, which was what no one's even talking about, it's the servicing side that is the biggest risk. Because if they've got, which they do now, they've got Mr. Cooper, one out of every 6 loans will be serviced by Rocket. They have an 83% recapture rate. So like everybody needs to let that sink in. Like if you are top of funnel, you work it through, you get the loan, you get the commission, you get title, you're now servicing it, and that client is now serviced by the company. You don't think they're going to try and keep all that in-house? Yeah. And they've already been clear they want to bring the cost of a transaction cut in half. So what agents have to be doing, and this is a key point of my keynote today, consumers are willing to pay a premium for convenience and service. In every single study ever done, they'll pay a premium for it. But if agents are going to continue to approach the industry and their presentations the same way they always have, they will fail. It will be a matter of time, because there will be a point in time where cost becomes something that's such a difference that the consumer goes, yeah, I mean, I want to use my friend and I know they're recommended, but this is a big difference in number because they haven't articulated value clearly enough to justify that difference. That is the road that we are going to be facing as an industry over the next 60 months.
James, let's stay on this path.
Yeah.
So you went through, not to bring it back up, but you went through a lazy period.
Yeah.
Looking
and really focused on this.
Well, there's a story, man. There's a story. All right?
You didn't hear anything I said except the lazy part. So
well, stay with me for a second. All right. So you went through one, right? We've talked about how busy the industry is and how many things are changing. That being said, recent statistics have come out, and it's over 70% of agents across the country sold zero houses.
As an average, but
but still, zero
big
houses,
number.
right? Right. Mm-hmm. That is, would you say that our industry is going through its own lazy period as we're going through all of these crazy things, and yet we're in that spot? How do you feel about that?
I see what you did there.
That was a good tie-in. I like that.
Well, I was trying to get there, man.
Yeah, no, it was good. We're dealing with a lot of issues. We have too many people in the business, and it's just a fact.
For sure.
You can't have 1.5 million realtors, and that's not even including licensees, and then have 4 million home sales. Brokers are trying to keep their doors open. There's a reason why there's the word broke in brokerage, because the reality is that's what we're dealing with today. All of the $2 billion club, myself included, had to pay massive settlements. We've cut staff. We've been trying to fight to keep everything where it is today. A few companies are growing. Most are stagnant or reducing. And leadership is hard. You don't want to upset that. So a lot of brokers aren't wanting to have tough conversations with their agents about what they need to be doing or rock the boat too much because they don't want them leaving for a competitor. That's the truth. Nobody will say it openly. I don't have a problem with it, but that's a fact. We are at a period where there's a lot of pressure and outside forces that are trying to change things, and certainly Wall Street is a big part of this. And I think that people underestimate what that is. Like, look, we'll talk about it for a second. You can look at anything related to the acquisitions that Rocket's doing. It's about grabbing roughly $80 billion worth of real estate commissions, and they're a component of that. If you look at CCP discussion with some of the companies that are wanting to change and push office exclusive, this is all about profit, the end. And it's very clear what the goal is with that. And it's like, and this is the part that I have a perspective on, that I think I wrote an op-ed on this that I put out last week. I'm one of the few people that you will meet whose family has been around long enough. That's how we did business. My grandfather would tell you, when I had these discussions with him before he passed away, I was like, how'd you grow your company to be so big? He was like, well, it's simple. If you have all the inventory, the agents work for you.
That's right.
Because at that time frame, if you go back to the 60s, 70s, and 80s, there was no multiple listing service the way it is today. For the agents that don't know this, you have no idea how good you have it today. Because back then, you listed a property, there was a book that was printed once a month, and in that 30-day time frame, the brokers would all try to sell their inventory internally. And they would hold the inventory back and wouldn't tell you. And so why was it there was only large brokerages then? Because it was about market share. We're literally pulling a playbook. Companies are pulling a playbook from things that were done 40 years ago, like it's some new revolutionary idea. Give me a break. This is how the industry operated for the longest period of time. But what we're talking about now is money. It's about trying to get as much market share during a tough time frame. That's what this is about. And unfortunately, and I'll bring this to reputation damage, we've been through 3 years of awful articles about our business. Just nonstop press getting it wrong and talking about us poorly. And And we're setting ourselves up for more of this stuff. And that's the part I really struggle with. Like, we have to put consumers first as our North Star. We need to be paying attention to what our fiduciary responsibility is, making sure sellers are being informed correctly about things that are going to benefit them or could potentially be harmful.
So for the agents that are doing 0 to 1 transactions a year, right? Let's say that brokerages have a total change in heart, right? They hear what you're saying and they say, you know what, I've got to stop thinking about my profit, which they're never going to do, and I need to get rid of
with that.
No, I know, but they and they leave the marketplace, right? A couple of things there, just thinking downstream, that leads to additional market consolidation,
correct?
Right, and that also leads to the top producers, you know, the 10% of agents, which is really a lot lower than that. They're doing 90% of the business. That continues to be a larger chunk of the business conducted by a smaller chunk of the participants.
Correct.
And there are models that struggle a lot with that, right? If more market consolidation happens with high producing agents, cap models obviously begin to struggle a little bit because the lower producers are sometimes the people that are continuing to pay bills, whereas you've got cappers who are then
Your middle
taking
and lower
on
producers pay all the bills.
Absolutely, yeah, right. So ultimately, you end up in a spot where you've got the top producers conducting even more of the business, which makes them hazards, right? It almost makes them liabilities in some cases for some of these brokerages. So, like, talking about the state of brokerage from your perspective, right? What is the winning scenario for a continuing competitive marketplace, right? Where there is a wide range of competitors, right? But there's still a healthy marketplace where consumers are well represented by and have enough options. You understand what I'm saying?
I understand what you're saying. I think the future of the industry, and I'm not going to set a time frame, but this isn't tomorrow. This is over the next 10 years. I estimate 500,000 realtors in 10 years. There's just too many, and it doesn't make any sense in the current model. Costs are going to continue to go up. Insurance costs are going to skyrocket because we're doing too much dual agency. All of this move to office exclusives is going to throw insurance to the roof. Or they won't provide any coverage at all, and then brokers will be faced with what they want to do if you're even doing dual agency. It's the ironic part about some of these conversations. Ancillary services is the key. If you've got Rocket who's going to cut $40,000 average transaction fee, so when you got both sides of the commission, you've got title, you've got loan origination in that number, and they want to cut it to 20. They're not shy about the fact they want to cut the real estate commission. That's the loss leader in the process. That's what they want to do. And I'm not saying Rocket's going to be the whole thing, but others are going to follow suit. So you're going to look at how do you get ancillary services into the brokerage to offset those costs? Because to your point, it's the top producers don't pay any money to the brokerage.
Right.
They shouldn't pay anything. They just don't pay a lot.
Right.
They make all their money off middle and lower producers, that 1 to 2 deals a year where they've got a better split.
That's right.
That stuff's going to roll up. That's going to get rolled up into teams, and you will see that consolidation. How it goes long term, it's a really good question. You can't run a profitable business when you're paying out 40% referral fees to portals,
right?
Where there's not much left in there, where they're also taking a cut of everything else. Brokers are in a tough spot because they have to watch RESPA issues for how they attach ancillary products to it. It's also hard to set up a JV, for example. On the mortgage side, I have a mortgage JV. You got to put $1 million aside just to sit in a bank account for HUD approval. That just sits there. You don't touch it. It just gets put into an account and it's required. Right. So that limits down to the top 10% of the companies that can even afford to do a joint venture, where you can actually make money on mortgage, not just MSAs or those aspects. So I think it's going to be an interesting time to watch, and companies are going to have to innovate and they're going to have to look at things differently. But you're going to see a lot of consolidation. Candidly, if Office Exclusives continues in the way it does, I'm not even thinking about that. Office Exclusives in itself is going to cause the largest consolidation of real estate companies you will ever see in the history of this industry, because the game that's being played of you need to come to our brokerage to see the inventory.
Yeah. Yep.
The ironic part is the companies pushing this are too small to compete in that game long term anyway. That's the funny part. Because if some of the big companies got together, like let's hypothetically say that Anywhere, where it has 200,000 agents, was deciding to launch a private listing network, and Keller Williams did it, that's 300 and something thousand agents between those two firms. It becomes a really big game of roll up, because independents and small, and by the way, this affects everybody, just for context. This is everybody's affected. So I don't care what company you work for, you will feel this. You will have to work for one of those firms to get access. I already covered, that's a whole nightmare problem. But this is a big one. I brought it up in front of the leadership team in Louisville this week. I had an audience of 300. I said, by the way, how the hell do y'all want to do comps if all of this stuff is off MLS?
Yeah.
I don't know how we're going to do appraisals and comps. For those of you who love this office exclusive thing, imagine going in the MLS and having 20 to 40% inventory. Not there. How do we price things? Or if an off MLS deal, I had a scenario came across, a friend of mine sent me a property sold way below market on an office exclusive, and it should have been 15% higher. That's now a potential comp, by the way. So like there's just such very short-sighted views of these things.
Absolutely.
We're not looking at the big picture of what we've created. And I'll leave you with this one comment, just for this subject, 'cause I get worked up on it. Everyone needs to go spend 20 minutes trying to go find a property in France or Spain or somewhere else and have fun trying to do that, because that experience where you need to go to every real estate brokerage website to figure out is where we came from and where we're headed.
This is buy or be damned. This is exactly what that is. And that's what effectively created ultimately fair housing and buyer agency, right? But give RE/MAX and Keller Williams and Anywhere a reason to not do that kind of private network. And
they
I'm
don't
begging
want
that,
to, by the way, to be clear.
I know.
Yeah.
It begs that question, though, because it's enterprise. And, I'm glad I'm out of the broker side and I'm a salesperson, because I had a small office of 60 agents. And we were talking about if POEs became the way not devolving too much, but the way that we were set up, I couldn't compete in that world of POE. But I was over here like, why would you, other than NDA type of privacy, why would you want to do that?
It's not privacy. Look,
well, I know, but
it's not. Look, this is the thing. I have this debate all the time. It's like, well, sellers want privacy. I'm like, stop. For the love of
Patrick
God,
Mahomes
if you go to Airbnb or VRBO and I have properties on there that are vacation rentals, you can't figure out my address.
That's right.
It's all hidden. They actually control the zoom so you can't even see where the house is located. So stop with this privacy nonsense. It's nothing to do with that.
Let's stay on this exact
You want
track.
to?
No, this is good. This is good. So here's my question. And I'm not trying to indicate where I stand on anything. I'm just curious.
I'm not either.
Okay, I can tell. So
Me neither.
we live in a capitalistic society.
We do.
Right? Do we trust the consumer to eventually understand all of this and make a decision that benefits them? So and see, I think this is so you shook your head and you said shook your head and you said so here's the deal. That's kind of a break, right, from a lot of what we talk about when we say, and I'm not disagreeing with you, but we're saying we can't trust the American consumer to figure this out. So what do? What is the alternative when we're in this heavily litigious environment, probably in an environment too that is very pro-consumer choice? How do we make sure that we stay on a track that doesn't open us up to additional litigation, right? When we're saying that we're not sure if we trust the American consumer to do what's best for them.
Well, look, I'm not a big government regulation guy, even though I'm from California. I'm not. I'll answer that a couple ways. We have to remember that American consumers, this is literally in my keynote today. So dual income households in the United States in the 1960s was 30%. Today it's 60%. The reason is in order to live in this country, mom and dad both have to work.
And one of them's always a realtor.
Fair, or a hairstylist. So the point I'm making here is, it's like, this is an infrequent transaction that they do 2 to 3 times in their life. That's it. This isn't Amazon buying something. This isn't like they're going to research properties. The reason they hire someone, the reason why they continually go to realtors, is because they're looking for guidance on something that is big and scary and expensive. I'll give you another stat. In 2001, the use of a realtor was on the buy side was 69% of the time. Today, it's 88%. So Zillow was formed in 2005 for historical perspective. So we've got all this technology and all this information and everything available. And everyone's been saying realtors are going to be gone, but ironically, the usage goes up. It's because people need help. They trust us to tell them the truth.
Right.
The truth is, we provide them options. I would argue there's no scenario where you need to sit down with a seller and explain to them, you should try an office exclusive, and then we can do demo. And if that doesn't work, we'll go to an active listing. Stop. It should be the seller goes, I'm a judge and I need to worry about my privacy. And you go, we have a solution for that. Right. But we should be leading with, the most important part of what you want, Mr. and Mrs. Seller, is what? I want to sell my house for the highest price possible in the shortest amount of time with as much convenience as possible. The end. And then we go, great. Then let's put it on the greatest marketplace on the planet to figure out, right. Oh, by the way, we're going to test the price. Testing the price means put it in front of the greatest marketplace and you'll know what the price of it is, for God's sake.
We got to stay on this because I like this and I like you and I like your passion. So we don't necessarily trust that the American consumer has the experience to make this decision, right?
Won't.
So there's that. The next question, do we trust our industry to regulate itself in an appropriate and an effective manner to benefit the consumer? Do we trust it currently? And I'm asking you, right? I'm serious. Do we trust our industry to regulate it effectively? Okay, so if the answer to that is no.
The reason I say that is because we made the wrong choice with this whole conversation on CCP. There shouldn't be the demo. If they want to do demo, there should be changes. But office exclusive should just be gone.
We got there.
So there you go. So there we go. And now here's the next question. What's left?
The state regulators.
State regulators. So that's where we go then.
That's literally where my keynote is next week.
There you go. Yeah. So that's what this becomes, right? Is we're looking at state and government regulation, which we're all generally not excited about. We're small business owners. We're not excited about that, but something has to be
Why
done.
do we have lines in the middle of a road?
Right.
Why do we make sure that people can't get driver's licenses? I mean, I'm not trying to say government's the answer, but we haven't done a good enough job of regulating ourselves. To me, this is another example. It's on path with your conversation. Why are we having a conversation about days on market? I'm not saying days on MLS, days on market. Days on market means I have a signed listing agreement and the property's for sale. If somebody brought me an offer, my seller would entertain it.
Right.
The property's on the market. By the way, that's backed up by every state regulator. It's just not regulated by the state. I'm actually pushing to change that. That's a conversation I'm having with the state regulators next week. Days on market needs to be a number that is clear, concise, so everybody's following the same rules. Days on MLS is a different conversation. That is an MLS policy. But the actual conversation about days on market is an important thing, and I'm pretty confident the reason why we have disclosures and why we've been more transparent is to remove litigation. I'm not sure like trying to hide things from people is a smart idea. So let's get rid of that concept. These things, there are things that I think the states unfortunately need to step in and do, and that is one of them. I know that's not going to be popular opinion, but we've already proven the fact that we're risk adverse, and I'm not ragging on NAR for that. I understand why they're risk adverse. $218 million settlement is a big number.
Yeah.
However, I'm not shy about the fact I don't think they handled the CC2 policy correct. I just don't. I think they should have made the change where if they want to leave demo in place with some changes, I think that would have sufficed. Then office exclusives, which does nothing except benefit the brokerage, is removed. If sellers want privacy, there are lots of paths for that. The RMLS already has an ability for you to hide the address. I'm pretty sure most of them do. And if you want to go a step further and they don't want to do things on MLS, then do a non-exclusive listing agreement.
Yeah. Yeah, I used to tell agents, because I think there's a sect of agents that they're really thinking that, they're buying the story of, my seller, there was a buyer out there that kind of knocked on the door while I had, we were in talks. And so we just needed to get this done because it's less traipsing through the house. And one, that's a slap to the face of a lockbox and our industry ethics and so forth and so on. But I used to, and I've had case study after case study. I had an agent, this is back before private office exclusive, but we had property waiver, and we had coming soon, pre-MLS was just starting. And there was a sight unseen. Well, we know about your house. This is her own house, the agent's own house. And she knew how staunch I was on let it go live for a day. Like, give everybody that shot, right? And she said, but they said, give me a ridiculous price. So she gave them a ridiculous price and said, yep. And I said, just hold it. That offer will be there 24 hours active.
That offer's not going anywhere?
So it wasn't even in the top 3. And this is multiple cases I've seen. It wasn't even in the top 3 when all was said and done when they went live. We don't know what the market is until we know what the market is. It's exactly your point. But I used to say, put out your hand. Have this talk with the seller. Try this. This is the positive of coaching agents to say, give it a shot, right? Don't be talking first about testing the market with the POE. Put out your hand. And then let me put $5,000 in it. Is that enough for you to go away for the weekend while I make your house active and we show it like to everybody and anybody who wants to see it? And if that's not, how about 10,000? How about 20,000? We saw a house recently in a luxury neighborhood here, and they got $500,000 over asking price. They did not even flip it. We have an ability to not go to syndication sites, to portals.
Sure.
But it went to MLS. $500,000 over the seller's expectation. It was, in the $1 million to $2 million price range, but that's what the market actually commands. And if it would have went to Zillow and the biggest portals, Realtor.com, who knows? It might have went higher. But so I can't understand how when somebody says they got what the seller wanted.
I hate that argument. Well, I'm like, the seller wanted this.
Yeah.
Okay,
but
so
would they really
if I came to the seller with an offer that was $300,000 more, they're gonna be like, nah, I don't want $300,000 more. Give me just.
But it's what my seller wanted,
You can't defy the
James.
logic of supply and demand economics. Like, if somebody's figured out how to defy supply and demand economics, congratulations, you should win a Nobel Peace Prize. Like that's not how it works. The market dictates the price. I'm not saying, just so everybody hears this, because James is all against it. I'm not saying there aren't circumstances where there are situations. We're in Kansas City, so Taylor Swift doesn't want to have her house out there. I get it. That's like 0.1% of 1%. Right. If your seller wants privacy, there are ways to accomplish it where you can get them the highest price, remove people going through the house, provide
it is NDA level privacy. In commercial, we do that all the time. You don't put a for sale sign in front of multifamily. It spooks the tenants. People think something's going wrong. But those deals, that's a completely different world.
Look, I'll stop on this. I did a pod with a really high-end company called Kai's down in Florida. So Mike Pappas, great guy, love the family. They've been in real estate their whole lives. They're the largest independent in the state of Florida. And he, on our podcast, shared that he just settled a lawsuit. And the lawsuit was the seller had an off MLS deal. They did the same thing you just said. Somebody came with an offer, and the seller realized later that they could have gotten more. Guess what they did? They sued
the brokerage,
the agent and the brokerage. I don't know the full deals because they ended up settling it, and it's confidential, but I can simply tell you that it was a lot of money. And the point is, I'm just sitting here going, like, agents, you are being manipulated into thinking this is a smart idea. You should have very, very clear parameters. You asked me this question, I'll answer this. There's disclosures you should have, informed consent. I don't personally think it's going to solve anything, but there is a way to do it. So first, informed consent disclosure, explaining all the details of it. Well, we all know that we send that stuff via DocuSign and nobody reads the damn thing and they just hit sign. So you need to do, if you're going to do informed consent, does it have the ability explaining to the actual seller that your property is not going to be on Zillow, Realtor, Homes, and Redfin as an example? Like the websites with all the traffic, it won't be there. That you're likely going to, 2 studies have come out showing that office exclusives take 2 weeks longer to sell. Your home might be on the market now for 2 weeks longer. It's going to sell for anywhere from anywhere from 2 to 17% less than what the market will dictate based upon studies. All of those in the disclosure, by the way, since this is being discussed, they should be individual paragraphs where the seller initials every single one of those things. And I'm going to go a step further. I'm telling my agents, like, we don't even want anything to do with it. But in that circumstance, you do not DocuSign that thing.
Yeah.
You sign it in person so that you've got a wet signature, or you do a Zoom so you're recording it so that you have the conversation of them, telling them that I just want to be clear, this is not my recommendation. I think you should do the open market. You made this choice, so that you've got CYA all over the place with this, because I'm telling you there will be a class action on this later.
Yep. So. I agree. Well, we are at time. This is exactly the conversation that we were talking about maybe having. James, this is you. It's not my podcast. It's Alex, but you are a friend of the pod now.
Oh, thank you.
You're welcome back anytime.
Appreciate that very much. It's great to be here.
It was awesome to have you, and we are really looking forward to your session, which is called The New Normal, Best Practices in a Post-Settlement World and the Future Ahead. Can't wait to hear it.
It's going to be fun. Thanks, guys.
James.
Appreciate it.